Hi, this is Jadu from Property Framework, and today I want to talk about the Melbourne property market. Melbourne is one of the big capital cities in Australia, but recently its property market has not been doing too well. Prices have not been increasing at all or very slowly over the last few years when all the other major capital cities went through a massive COVID boom and prices increased rapidly. Melbourne's market did not do too well. There was price increases, but not to the extent we would have expected from a major capital city like Melbourne. And therefore, it's fair to say that the Melbourne property market has been lagging behind over the last few years. So, is it a good time to enter the Melbourne property market as an investor? Can you enter this market? That's what we want to find out in this video. So we'll see what's happening in the Melbourne property market right now and what the future holds for the Melbourne property market and whether as an investor you should be investing here or not. Let's go into this. Okay, now we're looking at the Melbourne property market. So this is the map which shows the price variation across different suburbs in Melbourne. So as you can see, the inner suburbs of Melbourne, the prices are in excess of 1 million, whereas the outer suburbs in like Melton, Sunbury, Wyndham Vale, that region, southeast Melbourne, there are parts where property prices are around that 600s and 700s. The more affordable price points are around that 30 to 40 kilometers away from Melbourne. So as you can see, you do have very expensive markets as well around the CBD area, so in excess of 2 million as well. And within that 10-kilometer radius, you have markets which are in excess of 1 million. So that's the snapshot of the price points at different suburbs. Now, what's interesting is when you look at the 12-month change in prices. Now, this is showing the change in prices. So the dark blue, if you see any dark blues, that means prices have increased by 12% or more. The lighter blues are 6 to 12%, whereas the pinks is where you have very little growth. So that's only 0 to 5%. So if you look at the past 1 year, it doesn't look too bad. You do have some 50% of the suburbs going up to about 5%, and the other 50% increasing for about 10-12%. So it does paint a positive picture for Melbourne over the last 12 months. But if you look at the 3-month change, then you start seeing a different picture. You can see everything, pretty much 80 to 90% of the suburbs are now in pink, which means that 80 to 90% of the suburbs are really slowing down. They are be growing at a rate of 0 to 3%, which is quite slow. And pardon me, they're growing at a rate of -3 to 0%. So that's all the pink is actually negative growth. So you're seeing most of Melbourne over the last 3 months, most suburbs are going through negative growth. And in fact, some of these suburbs in dark orange, they have gone down in value by about 6%. You can see hardly any suburbs or just a very handful of suburbs that are in the light blue color, which has 0 to 3%. So nothing more than 3%. Okay, so from here we can see that over the last 3 to 6 months, a lot has been changing in Melbourne. The market is really cool and it's going down in value. Okay, now let's look at the rental market as well. So current rents, you can see from here, it's around 600, 700, you have 800, and inside the CBD areas, you have rents in excess of 1,000. But what's more interesting is the 12-month rent change. Now, this is the important thing here. So you can see everything is in dark blue or darker shades of blue, which means that rents have increased by 15 to 20% in Melbourne. So that's a massive increase in rents. And that's telling me that vacancy rates and the available properties for rent are in short supply. So the rental market is doing really well in Melbourne, but the sales market is not doing too well. That's what we can infer from this mapping the market from CoreLogic. So now we have data from CoreLogic for March 2024, which shows the performance of all the capital cities. So what we're looking at here is the number of suburbs that have increased in value over a quarter and the percentage of suburbs that have risen in value over that quarter. And then we're looking at the number of suburbs that have risen in value over the year and the percentage of suburbs that have risen in value over the same year. So if we look at Sydney over the quarter, 71% suburbs have been increasing in value. And over the past year, it's 98.6. So we can see that there is a bit of a slowdown, but it's not too significant. If you look at areas like Brisbane, Adelaide, and Perth, it's excellent. 100, 99%, 99, 99%, 99, 99%. So you can clearly see Brisbane, Adelaide, and Perth are increasing in value rapidly. And all the suburbs, nearly 100% of the suburbs, are increasing in value in these smaller capital cities. Now, let's look at Melbourne. So over the year, 90% of suburbs have increased in value. So that's not too bad. That's good. But look at this. This is the number that has changed. And this is what we saw in that graph that we saw earlier. So only 34% of suburbs have increased in value over the quarter, which means that nearly 65% of suburbs in Melbourne have dropped in value over the past 3 months. Okay, so comparing it to the other capital cities like Sydney, Brisbane, Adelaide, and Perth, the big capital, other capital cities, you can see that Melbourne has underperformed this year. At least for the last 3 months, there is underperformance, and we already know that there has been underperformance in the last few years as well. Okay, now let's look at the property prices for Melbourne. So this is the chart that shows the Melbourne property prices from 2010 all the way till 2024. So you can see Melbourne went through a boom between 2013 and 2017. Prices slightly corrected themselves in 2019, and then we had the COVID phase. Now you can see the growth during that COVID phase isn't too significant. It's only between 2020 and 2022. You can see that it's generally moving up, but it's not similar to what we would see or what we would call as a boom. So there is some growth, but it's not too good. And then since 2022 onwards, you can see hardly any growth in Melbourne. The median price hasn't moved too much over the time frame. So what you can see here is that since 2018, prices haven't really accelerated too much in Melbourne. So that's the first point. When you look at other capital cities, which have already had 50, 60% growth over the past 2 or 3 years, and then compare it with a city like Melbourne, which is definitely lagging behind as compared to the other major cities. Now, an important point we should always look at is the stock on market. So what you can see here is that the stock on market in Melbourne hasn't really gone down. You can see that the stock is remaining near almost the same throughout the last 10 years. Stock on market, there hasn't been a significant reduction. When price rises are about to occur, there must be a demand so high that the stock is getting absorbed rapidly. And that's when you would see prices to increase. For example, during this 2013 to 2017 phase, you can see stock on market was declining, and at the same time prices were rising up quickly. So now at this stage, there is no difference in the stock on market, and until we see that stock starting to reduce, we're not going to see any price rises in Melbourne. Now, let's move on to the rental market. Now, there's a totally different story in the rental market. Rents have dropped to below 1%. So that means it's in crisis mode. This is the lowest it has ever been for Melbourne. You can see this the chart here. Over the last 15 years, Melbourne vacancy rates haven't been this low. The number of properties available for rent is just dwindling really rapidly. Okay. Asking rents, the next chart, you can see Melbourne rents did not increase significantly, or we can see there was a steady increase in rents. But what is clearly observed here is that from 2021 onwards, there has been a sharp increase in the rents. Rents have increased by more than 20%, and that's because the availability of rental stock is just dwindling over time. Okay, so what we are seeing here is very clear from the first chart, the mapping the market chart, and this chart that the sales market is not doing too well, but the rental market is performing really strong. So now we've seen the sales side of the market and the rental side of the market. So what's actually happening in Victoria? Now, investors are actually leaving Victoria for a few reasons. The main reason being the taxes. So recently there was a change in the land tax threshold, which was reduced to $50,000. So that means that if you hold an investment property in Victoria and the value of that land is more than $50,000, then you are liable to pay land tax. And on top of that, with the stamp duty in Victoria is significantly higher than other states. Also, policies generally favor the tenants over the landlord. And there are a lot of compliance matters that the landlord has to consider when they are renting out to tenants. So it heavily favors the tenants and doesn't favor landlords too much at this stage. So what this means is that investors are leaving the Victorian market, and therefore that's reducing the pool of rental properties available for rent in Victoria. And then that's the reason why rents have been increasing, and they will continue to further increase as more investors start pulling out. And what's going to happen is as rents increasing, yields will start increasing. Okay, and investors won't stay out of the market for too long. As they see the yields increasing, they are going to come back into the market. It's not now, but definitely in a couple of years, the investors are going to come back into the market once they start seeing the yields increasing. And that's when you could definitely see that demand really picking up in the Victorian market. When investor activity increases and home buyer activity increases, when that demand increases and when that can absorb the surplus stock on the market, you will see that shift in momentum in the Victorian market. So it's only going to be a matter of time because before rents increases to the price that investors want and the market starts turning. But right now isn't probably the greatest time to enter the Victorian market if you are after short-term growth. Now, if you just step back and look at Melbourne, Melbourne is a global city, right? It is a massive city. Its economy is really strong. In the ComSec State of States report, Victoria was ranked the second largest economy in Australia, second best performing economy, which means that it has a really strong economy. Unemployment rates are at 4% in Melbourne. That's the lowest it has ever been in 50 years. So that means the job market is really strong. People have jobs, they have money, they can buy property. Infrastructure spending in Victoria is the best amongst all the states. In fact, over the last 3 years, Victoria has been the highest in terms of infrastructure as compared to all the other states. So massive infrastructure spending going on in Victoria. As you know, population growth, most of the migration comes into Melbourne, so there's going to be much more population growth. So there are plenty of factors which show that the demand is going to pick up in Victoria and it's going to come back quite strongly. So there's no question that the Victorian market will rebound and come back to its long-term averages. Statistically speaking, it has underperformed for so long, so it has to perform up strong over the next few years to come back to its mean averages. So if you are an investor who is after short-term growth, looking for growth for 1 to 2 years, then don't enter the Melbourne property market right now. Because if you enter right now, you're not going to get any growth. You'll only have maybe very little growth, or even your prices may go down in value. But if you're someone who doesn't really care about short-term growth, you're just in it for the long term, you just want something to buy and hold for 30 years, and you're after that growth over that 30-year period, then definitely Melbourne is one of the strongest markets in the country. You will definitely get that growth. So I hope that this video made it clear about what's happening in Melbourne and what the prospects are in Melbourne.